Good evening. This is Doc Severson for the TheoTrade report for Tuesday, April 17th. I'm going to start off tonight's report with what I call the most interesting chart in the world right now, which is on the S&P 500. And these are the futures contracts. This is just a 4-hour chart, but it really doesn't matter what we're using here because we've had this pattern ever since we've been plumbing the lows again. And if we pull this back, you can see how we've really retested the lows from February, got very, very close. I would have preferred to see an undercut, but this is what we got to work with right now. And no matter what you think of this particular pattern, there's a couple of different patterns I see in there, one of which could be an inverted head and shoulders, another of which could be an ascending triangle pattern. Again, it doesn't really matter what's inside the box, but what's happening here is that it's broken above a very important neckline around 2680 to 2682 on the S&Ps. And as I'll show in a minute, this also came with a great deal of energy, so it's no surprise to me that we've broken out to the upside as well as had a pretty healthy move today, because it's almost like what happens here is when the price gets wedged into a pattern like this, the potential energy just gets built up, and eventually one side releases and has to part way for the other. We see this type of move all the time in the markets. Range contraction like this leads to range expansion, and then it goes back again. Let's explain this box here. A lot of folks have asked me today, hey, how far is this thing going to break out toward? Well, again, this is somewhat art versus science, but if you see a pattern like this with an open end to it, such as an ascending triangle pattern, or it could be something like a cup with handle pattern, either way. Typically what you're going to do is you're going to set the upside target as really the height of the open end. So if we pull this up here, we're going to see that the upside target for this is going to be approximately around the 2800 level on the S&Ps. Now, I don't think it'll get there the first shot out. The reason for that is because this overhead trend line should cause some type of reaction, even if the price does continue to go higher. Now, I'll have a little bit to say about the price going higher in just a minute here, but if the price does go higher, this will be a place that the price more than likely will react on the way back up. Now, let's zoom out for a minute and see what's happening from a macro perspective on the S&P. Here's the Spiders ETF of the S&P 500. So this is a different derivative instrument of the full S&Ps, but it really will produce the same patterns that we're looking for. So from a top-down perspective, again, the extreme rally that we had into 27, which went completely parabolic, exhausted the energy on all time frames as we got through the end of January of this year. And from that, we've had a reaction, even a correction to the downside. We've exceeded 10% to the downside. So far, this has played out very much to Hoyle, because range expansion like this in a quiet and trending market, and this was very quiet and very trending that we had into 2017 and January of this year, we had next to no implied volatility, forward pricing, and risk. We've moved into a sideways and volatile market character. So this is a very classic transition from quiet and trending into sideways and volatile. So frankly, the market's doing exactly what it's supposed to be doing right now. And one time frame at a time, it's building back up the energy stores. Now we have the weekly chart, which has done enough work to be able to support the next trend in whichever direction that is. Monthly trend still got a ways to go. The monthly chart still has probably a few months left before we're going to be in position where this can support the next trend. But again, price can do whatever price wants to do. We merely are looking at these price patterns based on what it's done in the past. Now, zooming into the daily chart, we do have something kind of interesting here, which is the expected move for the week. So you can see the upper expected move. I did have an alert. It got hit today as the upper target on the expected move got hit after just 2 days. So we had about a 50 handle expected move on the full S&Ps. So it could have been plus or minus 50 points either way. In only 2 days, we've already gapped up to about that 50 handle move. Now, sometimes this level can be overhead resistance, can be difficult to chew through. However, we've seen plenty of these expected moves just completely eviscerated over the last couple of months. And in some cases, what we've seen is one side hit, and then it fades back down and hits the other side. So we are not out of the woods in terms of volatility. That is still a possibility that's on the table. And we have plenty of catalysts later on this week to provide that. On this chart also, you can see what I was talking about in terms of the energy. This is a big energy number sitting here, chopped up. All of this nonlinear price action, what it does is it takes this fractal energy study and it shows the amount. Think of this as a fuel gauge, if you will. So full energy up here, empty tank down here. When we hit empty on this, this is typically when trends stop when we get down in this area down here. They usually have very, very low probability of continuing in that same direction. And that goes both ways too. This is a bidirectional indicator. So we had extreme moves to the downside as well, which also hit that exhaustion level. So we've also hit exhaustion to the downside over here as well. And if this continues in this direction, we will also hit exhaustion to the upside, more than likely as it gets near that trend line. So this is just how the S&P is moving. As it trends into exhaustion, it's usually going in the opposite direction, or it's consolidating and then breaking from that consolidation zone. Range expansion moves to range contraction, and then the cycle repeats over and over and over again. It doesn't stop. Now, from a larger time frame perspective, one thing will happen here in the next several weeks is that eventually this sideways and volatile pattern will resolve itself in one of two ways. It'll either resolve itself back to the upside with quiet and trending again, or it will actually start to vacate this pattern to the downside, and that's going to be a trending and volatile. So as you might imagine, we haven't seen that type of pattern for some time. We have to go back to the 2007, 2008 timeframe to see a sideways and volatile market transition back into trending and volatile. Again, relatively rare for this to happen. We had its chance back here in 2015, 2016, did not transition to the downside with trending and volatile. Instead, what it did was, as of the Brexit, it changed immediately back into quiet and trending again. And it's been in that, and it was in that mode until January of 2018. So that's the bigger time frame picture, which really drives a lot of my analysis on this. And it's just, again, it's going back and forth between range contraction to range expansion. Now, what could threaten that rally, however, is earnings after hours. So we have a number of earnings left this week. They're not quite as important as the ones that occur next week. Next week, we start to get the big cap tech stocks like the Amazons and the Googles and so forth. So we did have Netflix come out earlier today. I'll look at that one right now. But what has happened after hours is this is IBM. IBM has gone from about 161 and has trimmed about 10 points off of there. That's fairly substantial. So that's going to put a hurt definitely on the Dow, if not the S&P, tomorrow morning, if these prices stand into the open. So also we mentioned Netflix. Netflix was yesterday. And you can see how we've hit new highs on Netflix. New highs on Netflix as we rallied from 307 up to now 338. About 30 handles put on Netflix alone. So if the market's going to continue to rally above the current levels and into that descending trend line that I pointed out, it's got a lot of hoops to jump over. And a lot of those are regarding earnings coming up. So tomorrow morning we have Morgan Stanley, we have US Bank, as well as 3 bouts of Fed speak. And then Thursday, not much in the way of earnings, a little bit more Fed speak. And then Friday, we also have a stock that used to move the market but no longer really does, which is GE. We also have Schlumberger and Procter & Gamble announcing, as well as more Fed speak. There's a lot of Fed speak going on this week since they're out of the quiet period. Don't forget, on Wednesday also, we have the Beige Book in the afternoon, which can move markets. Hey folks, before you go, I want to talk to you for just a minute about the TheoTrade Live Return of the Trader event. Why are we calling it the Return of the Trader event? Well, because we believe, and we've already seen, volatility returning to the market as of February and March, and we think it will continue going into the rest of this year. So there's no better time than now to get prepped for all this volatility than at this event, because this is what we're going to be focusing on. So look at all these happy people from our last event. You can be one of them at the next event, which is coming up the beginning of May. So May 3rd, 4th, and 5th. I'll get into that in just a minute. Right now for members, the members are getting pricing of $1,100. So you've got until April 1st to get this price level. Otherwise, it's going to end up going up again. And also, don't forget that the event is limited to 200. So once we do sell the 200th ticket to this, we will shut down admissions to this event. All right, so where is it at? When is it going to happen? All those things. So it's going to occur at the Scottsdale Resort at McCormick Ranch in Scottsdale, Arizona. This is where we were last September. It is a really, really nice place, and I'll talk to you a little bit more about that in just a minute. So who's this for? Intraday traders, swing traders, income traders. We've got something for everyone here. So again, on the 3rd of May, May 3rd, is where we have the event registration and the happy hour. So you can meet all of us live, can corner us in the room and ask us questions. And drinks are on TheoTrade, so don't forget that. We also have a quick event for you guys with Jeff and Don coming up. On Friday, May the 4th, this is when everything kicks in here. First session of the day will be Return of the Trader by Don Kaufman. And then we'll shift into Jeff Bierman. Professor Jeff Bierman will go into negotiating intraday volatility shifts, something that's very, very important in this type of volatility. The last session in the morning will be Perfecting Your Nasdaq and Intraday Trading Style by Tony Rago. And after lunch, I'll come on board with Fractal Analysis Intensive. So we're going to be talking about fractals in the context of what's happening in the market today. And then we'll go into Taming the Trend Day by Corey Rosenblum at the end of that day. So that is Friday, May 4th. So it's a market day. And then we will have the second day, Saturday, May 5th. And we're going to go right back into Don first thing in the morning. Probability and Profitability in Trading by Don. Price Action Intensive, again, by myself. So I'm going to be going into specifics of reading price action. Tony will go into more about intraday trading, the Nasdaq E-mini. Don Kaufman will go into the state of the markets. We'll talk to Corey for creating your game plan for the next trading day. And then we'll have all of us up front, closing ceremonies, final giveaways, and everybody is sent home at that point on Saturday evening. So you might be saying, well, that all sounds great, but what's in this for me? Well, we've got 9 reasons here as to why we think this is a good event for you. First of all, just hearing repetition, practice and repetition over the next 2 days as we conduct this seminar. You're going to hear the same things again and again, and pretty soon you'll start to think in the same way. Don't forget that almost all of us trade at home or in our office by ourselves, and many times we don't feel like we're connected. Well, this is where we can also show you that you're part of a bigger community. You're going to hear from others and understand what they're doing in today's market. And by doing that, you'll discover your one-of-a-kind style. This is where you form your own trading strategies. You're going to be talking to not only the instructors, but also other people in the room to gain their wisdom, get their approach from things. Understand how to risk manage in today's market, play it safe, and play it profitably. And make sure that you're not trading just out of boredom. We're not going to get boredom in this year's market, but making sure that you're looking for just the best setups and then being decisive about taking those setups. And then finally, ultimately, this is what we're all after, is that peace of mind and freedom that all of us are looking for through individual trading. Now, this is not some event where we just sit up at the front of the room and put a virtual wall in between you and us. You're going to meet all of us. You're going to talk to us at the breaks. We are here for you, to talk to you. So Don, Jeff Bierman, myself, Tony Rago, Corey Rosenblum, as well as your other 200 attendees. Now let's talk about the actual location, the Scottsdale Resort at McCormick Ranch. And I'm particularly excited to talk about this because there's some really cool things about this place. So it's pretty easy to get to. It's not that far from the airport. It's a world-class airport. You should be able to get direct flights in just about regardless of where you live. Let's talk about the venue for a second. This is what a typical room looks like. And I do want to mention, I mention this every time I talk about this event, but I love the chairs that they have here. The chairs have got armrests. You're not going to be sitting here playing elbow wars with a guy next to you. They recline, so you're going to be comfortable all day long. You're not going to be sitting on some little narrow, tiny banquet chair that's going to wear you out after 3 hours. The weather should be excellent at this time of year. There's all kinds of events and outdoor activities that they have at this particular ranch. Now let's talk about the meals as well too. This is where, again, I get excited about this because breakfast, this is not just any breakfast. This is a really, really good breakfast served on Friday and Saturday, as well as the lunch. So we bring in the lunch. We bring in the lunch here for you guys. Bring in the lunch. So both days we're going to serve you breakfast and lunch. For dinner, you're on your own because a lot of people want to go explore the area. But what we find is a lot of people get together as groups anyway and go out to eat for dinner. So anyway, get your ticket right now. Make sure you get it in before April 1st to be able to get that preferred pricing. Don't miss this event. This is a great time. There's a lot of terrific information that's brought out there. Everybody walked away with a smile on their face last time. We want you to be one of those people to join us as well too. Hope to see you out there. Take care.